Hey, this is Matt from InvestiQuant. Today is Tuesday, December 1st, 2020. And this morning we saw the markets gap up on this first trading day of the month. And they have mostly held on to the gains from the early morning gap up this morning. You can see the S&P in the top left chart. It's been a bit stronger than some of the others. It gapped up, pushed higher, and has since kind of been consolidating the upper portion of the range as it is starting to approach the highs of the session here. The Nasdaq's just underneath it. It has been a little bit stronger and has continued to make new highs throughout the session. And the Russell on the far right and the Dow on the bottom right have not been quite as strong as the others, but they're still holding on to some gains from this morning's gap. But what I figured we would do this afternoon is just take a quick look at a study based upon going into the end of the day on the first trading day of the month and having green candlesticks forming like we're seeing here in the S&P and the Nasdaq. So let me set this up looking at all four instruments, and we're going to use an intraday time-based entry of 3 p.m. Eastern Time. It's set up as a long. It exits at the close, 4:15 p.m. Eastern Time. For the opening filters, I'm going to use gapping up, which just means we opened above the prior day closing price. That's usually important on these studies, especially on the first trading day of the month. The gap direction is often very important. So I'm going to use gap up here. And then next, I'm going to go into the post-open filters and just add a little bit of information about what has happened since the market has opened this morning. And the only thing I'm going to say is we are trading above the opening print. So if I go to this intraday close versus intraday range, I can hit equals next to close greater than the open. And that means that as of 3 p.m., since that's the entry time here, you are trading above the opening print. And that appears that it's likely to happen here at 3 p.m. We're not quite there yet, so of course I don't know, but currently that is true in the S&P and that is true in the Nasdaq. The Russell is approaching its open, as is the Dow, so both of them are close but not quite there yet. And then lastly, I'm going to go into the indicator section, and I'm going to say that we are in a similar environment. We're at all-time highs right now, so I'm going to put us in a bullish environment defined as above a 10 and above a 200-day simple moving average. And then I'm going to finish up by going into the calendar section and adding it is the first trading day of the month here from the unique days. I'm just going to grab that from the active today section, but it is right here in the unique days section. I've got that added. Now I can hit view results. And here we go. So these are the results of going long at 3 p.m. Eastern Time and exiting at the close, 4:15 p.m. Eastern Time, when you gap up on the first trading day of the month in a bullish environment, which is defined as above a 10 and above a 200-day simple moving average. And then at 3 p.m., you are trading above the opening price. So this is entering at 3 p.m. and exiting at 4:15 p.m. Eastern Time with this pattern. And historically, the S&P has 33 samples of this pattern dating back to 2003. The Nasdaq, similar size of samples here at 38, the Dow 32, and the Russell 38. So pretty similar sample sizes across the board here. If we look at the win rates on these, which is basically telling you how many of these have closed above that 3 p.m. price, they're all pretty mild. The S&P coming in about 55%, the Nasdaq 55%, the Dow 53%, and the Russell 58%. If we take a look at the average win to average loss, they're very similar in size for the S&P. The Nasdaq is the only one that's kind of outsized, and it's outsized to the winning side, so the average win is quite a bit larger than the average loss. The average win is a little bit smaller than the average loss in the Dow, and the average win, average loss are both pretty similar in the Russell. So as a group here, if you look at all of these, none of them are really showing a real strong directional bias. They're all pretty mild. And, you know, I looked at a handful of different scenarios prior to doing this video, and I saw a lot of stuff that was just mixed data. So this is right in line with many of the other scenarios that I was looking at where it wasn't necessarily strong or weak. It was just mixed. So hopefully you'll find that helpful. Good luck the rest of the day, and we'll see you tomorrow.